Good afternoon, everybody. Hope you're well. It's Mike Smith here with your live market update and chart of the day, or charts of the day even. Hope you're well, and the week has started good. Interesting, very interesting day on the markets today. After what looked like a good start to May, we've just seen a little selling off. So we'll just have a look in a bit more detail of what's going on. Just let me know you're hearing me okay and seeing the things. Yes, thank you, Wayne. All is good. Fantastic. Okay, let's get things kicked off as we just put up this important message. Please remember, these are my opinions only, not representative of Go Markets. Of course, this is delivered for educational purposes only, and of course, because of that, anything that you see or hear should be taken as part of that educational process, not direct advice to take trading action. You need to make those decisions yourself. And of course, risk management is a key part of everything that we're teaching them. Pretty sure that we're going to have to exercise some risk management this morning. Good afternoon, Michael. Hi, Rachel. Good afternoon, Bill. Good to see you all here. Okay. Right, let's have a look at what's come across the news. Well, overnight it was a big tech sell-off. Nasdaq was down about 2.5%, pulled down the S&P 500. Dow closed pretty close to neutral. We'll have a look at charts in a second. The US futures actually started off in a reasonable place, but have weakened as the Asian session has gone on. And Asian markets have moved to the downside in early trading and just continue to do so. Now I think we're pretty close to the lows of the session on the ASX. But again, we'll have a wee look at that in some more detail in a moment. US dollar index, which has been on a little bit of a decline over the last couple of weeks or so, has recovered a little. Precious metals have edged higher again because of that US dollar weakness, but just a little shy again today in Asia. Now, copper's been on a tear. We've talked about this before. It's been a key driver of some of the charts of the day that we've had up of late, and we'll have a look at that as well. Chinese CPI data has just come across the wires. There's very little else from an economic point of view today that's going to have the potential to move markets. So it's going to be a technically driven day primarily, although there are significant earnings out in the US as we enter one of the final weeks in the season. We'll get a few more earnings coming across next week, but really this is the last big one of any note. Just to put some meat around those bones, let's just quickly peek at the futures. And you can see here the Nasdaq and the Russell are both getting pretty well tanked on the day. You can sort of see the Dow, which was positive, and the S&P was actually positive to start the day as well. Both have sold off as well. S&P's heading towards near 1%. It will be the tech stocks that are pulling this down primarily. And because of that, of course, we see the US dollar looking slightly positive, but not possibly as much as we would have thought. So currencies are relatively flat in comparison to what you would think because of the equity market sell-off. As I say, we've seen gold and silver looking slightly light, and we saw energy just pull back a little bit. Not surprisingly, we're expecting the European markets to open weaker, and we can see the VIX spiking there. Now, here's the one bright spot in it all is copper. We've talked copper before. Just put up a chart. Now, this has been the play of a little while. Now, we actually did have a pullback yesterday. And there you can see that pullback that we had, which was, I think, around about 0.6%. So around about, so not a massive pullback, but you can see we're getting a little bit of what looks like a reverse head and shoulders type pattern on the hourly chart, which is very interesting indeed. Didn't expect to see that, but just again to put this in context, if we just put it on a monthly chart, just to show you where we're at and why copper is. I mean, we've absolutely blasted through 2011 highs. As you can see there, that was around about 450. We talked about this last week, and it was the basis of which FCX in the US and OZ Minerals here were our charts of the week last week, or certainly charts that we're interested in, I think, in the case of the latter. Why is copper moving up? Well, there's a number of reasons. Obviously, there's fairly major infrastructure spending going on. That is obviously boosting demand. We've got supply issues. It's that much more expensive to get copper out of the ground than compared to that which it used to be. And of course, we've got the moves towards decarbonisation, which is going to involve significant copper in the process of developing the infrastructure to cope with that. So a number of reasons why copper is, and one would suspect, going to continue to move higher. And we might actually do a webinar on copper and look at the different ways you can play copper. But well, for now, obviously, for those of you trading share CFDs, there's a fairly easy way to do that. Though obviously it isn't pure as trading the metal itself. Just quickly checking down on comments. All good. Fantastic to see you here, Shane. Good night, David. Yeah, so I do. I think copper's got. I can't see any reason why copper would sell off, apart from perhaps if it gets a little overheated. We may just see a retracement along the way. Of course, nothing goes up in a straight line, although copper's had a pretty good shot at doing that if you can see what's happened really since the middle of last year. Okay, so let's have a look at some charts, hey? So let's start with the Russell. The Russell is looking very weak, as we've already suggested, looking as though it's going to pull back down and retest this. And this is obviously despite earnings coming in well. It may well be that if we get some good earnings again today, it might just stop the sell-off. It might be just some profit taking. If we look at the US 500 as well, you can sort of see we've really sort of sharp drop over the last 24 hours. Let's put this on an hourly chart. You can see what's happened since we. So this was the US session here. These last few bars on the hourly chart, and this is Asian Open. You can see we actually spiked up higher to start with, and then really have sold off since there. So we're looking to see if we can just find some, albeit temporary support, perhaps at around about this 4063 level. If we look at the ASX futures, since we're here anyway, we'll just put those on. Obviously, we're still way above that 1700, but again, you can sort of see what happened since Asian Open. Not a very pretty picture, but we're still in we still are in an uptrend. We've got an upwards trend channel going on there. They'll obviously come off the highs we hit during yesterday's session. Yesterday's was interesting. We sort of started off really strongly and then sold off as the day went on. No, Chris, you can't do copper CFDs on this, but we are. I have actually pinged a message yesterday over to the trading desk, who may be in a position to give me more details about whether it would be possible or not possible. So just watch this space on that. Okay, so US dollar index, let's have a quick look at that. You would have expected a slightly better performance on USD than that yesterday, but it did have a fairly, g'day Ross, fairly significant bout of 90. But you can see it's really going nowhere today. And that's quite surprising because of that equity market sell-off in the futures contracts. You would usually expect to see the US dollar starting to climb as a result of that, but it isn't doing that at all. If we look at precious metals, just lost a little bit of steam over the last couple of sessions. Silver, interestingly, pulled back a little bit yesterday, and as we've already discovered, is slightly down in trading today. Pretty close to neutral, not significant. Whereas if we look at gold on the daily chart, this is a sort of difference in futures contracts. Obviously, we're seeing it slightly down on FinViz, which is the next contract, but the CFDs tend to sort of do the contract after that. Absolutely, Anthony, absolutely. We'll have a look at the NASDAQ. That's a good call. But we are seeing gold push higher, and that might be just a little bit of flight to safety going on, a little bit of concern about where things are at. Anthony says, can we have a look at the NASDAQ with a view to shorting it? Okay, well, let's start with the daily chart first of all, of course. Let's just put it all into context. Now, where the NASDAQ is at, of course, is that all of the earnings are out, okay? And all of you, and up until perhaps a week ago, all was looking well. We've got then we had this going on. We talked about this last week. It's potentially a concerning sign is that we had a double top there. We had it break through. We had it retest that 1378, and now we're dropping downwards again now. So we look at this chart. We say, well, where could the next support be on the daily chart? There's certainly a fairly well-established support when last we had this pullback. So this was about an 11% pullback that we had mid-Feb to early March. We're nowhere near that to date, but as we say, we would expect normally a 5 to 6% pullback periodically, and you can see that this pullback now is around about 5.6%. So in terms of where it's at now, if we move lower than where we're at now, just again put it on the line chart, you can sort of see that this looks like an important level. Let's just drag that down a smidge. You can see how it was resistance here, here, and here. And so this 13191 looks as though it could be interesting on the daily chart. Now, if we break through that, the next level of support from a close price is where we put this line here. We may well get a little test below. If we could actually just move that down a little bit to around about that 12,800 mark, just to make it a nice round number, because you know how the market likes nice round numbers. So what that means is, should we break this level, there's potentially, before we hit next, there's potentially another 3% in this. So not massive. Now, what's probably important in terms of the market as a whole, because this is regular, we've had pullbacks aplenty on the NASDAQ. The last one was a little brutal, and this one is heading the same way. But really the key with this is that if it does start to challenge 12,800, that it doesn't drop a further 500 points to that more critical level where it tested last time at 12,300. If it does start to test that level, then we could see a major sell-off in the market as a whole. Now, that's still quite a distance away from where we're trading now. We had that 3% down to that first line, and then another 3.5% down to test that. So it certainly would be interesting, and that would create a longer term double top and may precipitate a lot of selling, possibly even down 100 points to that next level. But so we've got some nice lines in the sand there. If we were to consider short in the NASDAQ, we have got some, as I said, we've got some nice lines in the sand that would suggest those are the key intervention points, both in terms of profit and in terms of in terms of entry and in terms of profit. Now, what's it doing short term? Because I'm not sure where your question was pitched, Anthony, whether it was a short in terms of the right here, right now, today, or whether it's a long-term short. Now, you can see there that if we popped a 30-minute chart, the last 2 hours we've tested this 13190 level 4 times, okay? So as you would expect at this time of the day, in the Asian session. Things are starting to cool off. The major movement has actually gone on significantly longer than it normally would, and we're looking to find some sort of bottom. And then we'll get European Open, and it might be at European Open we see that retest of 13,191. So in 3 hours or so. We've got no data in the meantime to come out, nothing really significant. I'll just have a quick look at the economic calendar. So you can see there that Chinese inflation is going nowhere. In fact, that should be quite positive for the market in terms of CPI has dropped both month on month and year on year, not by much, but gone down 0.1%. So that should be positively viewed by the market, and that news coming out may well be something that the market may digest and subsequently feel okay about. Now we do have some foreign investment figure out later on today, although they don't usually specify a time. It just comes out when they feel like it. But in terms of European data, we're not going to get a lot out. We've got the economic sentiment data coming out of Germany and the Eurozone. If there's already some major selling going on, that may contribute if it comes in weaker or may slow it down. But you can see there's really nothing coming out of the US of any note. The JOLTS job opening is, although in theory does sound quite important, really doesn't move markets very much. But it depends how sensitized the markets are once it gets to that point in time. But great question, Anthony, and is an interesting one. So let's look at some of the currency pairs. If we look at Euro USD, we tackled this 121.77, and surprisingly, as I said, with equity markets selling off, we'd expect the USD to look a little stronger. It's not. In fact, we're seeing the opposite. We're seeing the euro just push up slightly. Not the momentum yet to really tackle that 121.27, and really not a lot in this. We do have a double bottom type of formation on the 30-minute chart, but you're talking 32 pips to take us back up to retest that level. Really short term, really aggressive traders may be interested in that, but not for me for right now. If we look at US yen on the hourly chart, you can see we've moved up a little bit in early Asian trade and then just dropped back down again. So nothing really going on here. We're in the midpoint of these two ranges here between 108.30 and 109.30, which we actually put on last week. You can see we bounced off that 108.30. Really quite a nice bounce, and would have been a 60 pip move yesterday to the upside. But really sort of limited again, maybe better opportunities elsewhere. Well, where could these opportunities, you're welcome, Anthony, where could these opportunities be? We liked GB pound. In fact, the market loved GB pound yesterday. You can see there's the GB pound USD at 141.32. Let's call it 141.33. And let's just pull this back on a weekly chart for context. You can see this is blue sky. We've tested this before. You can see that line we put on there at 142.85. So that suggests we've had a look at this chart before. And if we go right back to beginning of 2018, this is the level that we're having a look at. So if we do break this, then we've got a potential move up to the next long-term resistance at possibly around about 130 pips higher, 120 pips higher maybe than we are now. If we look at the, as I said, if we look at the 30-minute chart, you can see how we tested this loss yesterday. We then pulled back, just a little bit of profit taken on this move here, and now we're retesting this. So we really like the GB pound at the minute. Now, if we look at the Aussie US, not surprisingly, we had a weaker day, but again, this is bucking the trend a little bit from what we'd expect. And so that US dollar weakness is somewhat surprising. And with this bounce here, a close above that a close above that 78.60 could be interesting. That could see us higher. Again, up around 90 pips or so. So again, let's look at the hourly chart, see where that is. We've got a nice mark there in terms of the pivot highs we hit during yesterday's session that could be worth keeping an eye on. Now, I just wanted to put on GB pound Aussie, which has paused now, but this is really interesting again. If we look at a daily chart, you can see why I like this as a chart. So this is actually our chart of the day for the FX, is the GB pound Aussie. And we're looking for a break of 180.50, okay, on the daily chart. We think that could give us quite a nice move higher, possibly up to around about this 181.20 level. So about another 60. Look at the move yesterday, that bounce off support. We did see that, and I was nearly pushing the button on that earlier in the day, and now wish I had, of course, because although we expected it to go back up and retest this level, you can see it did it in one day, somewhat unusually and unexpectedly. Now, there's two ways this could go, and that's why it's interesting. So if it does break 180.50, there's upside there of about 60 pips, but it could also bounce off this and come down again if we see continued strength of the Aussie dollar versus the USD. So really, the best way to make that judgment is to see what happens on the shorter term chart. Okay, so watch this over the next couple of hours. If we start to see this push much below before where it is now, then certainly in the first instance we could see it down around about that sort of 80 pip, 75, 80 pip mark there. So we like the GB pound Aussie, but in terms as a chart of the day, but in terms of which direction to trade, the next hour or so is going to be critical. GB pound yen, good call to have a look at that. Let's just quickly look at the daily chart. Obviously, that yen weakness, it's actually not a bad call that way. That yen weakness that we see and that GB pound strength has pushed it over key level of 153. I'm suggesting this probably has been a multi-year, again, since beginning of 2018. And you can see how this is an important level here and here. So this is an interesting potential break here. Look at the hourly chart. You can see it after it broke through yesterday, just pulled back a little bit in Asian trading, slightly to the upside, and we've got a nice line in the sand there to say, hey, look, this could be worth a look. So that would be, if there was a chart number 2 of the day, that would be it. We quite like that. Let's just have a look at the at the Kiwi yen, which is also potentially a chart of interest. And you can just see it's pulled back a little bit just to retest that resistance, but none of these candles on the daily chart have been convincing. If you look at the 4-hourly chart again, you can see these large wicks associated with this breakout, but quite conceivably we could have thought about getting in here, but really been in a neutral position for right now. So yeah. Now, let's just have a look at what's happening in the equity markets. Now, as I said, we were at our lows of the session. I'm just going to refresh this. We're slightly off those, but still pretty close. So really, there's been a fairly dramatic sell-off in the ASX since open. Okay, you can see there we actually opened higher, but of course, once we had all the stocks open, we moved from being about 0.1 down to 0.5% down around here, and then continued to move down after that pause there. So the last hour really has been last hour and a half has really been quite brutal on the ASX. Quite a lot of selling off, perhaps putting some money in the bank in the short term. Certainly you wouldn't have expected this sell-off, but we've seen this right across. If we just quickly look at, you can see the Nikkei's down almost 3%, somewhat outstandingly, but you can see that broad-based sell-off across Asia there. Kospi you would have expected to get hit hard anyway because of the Nasdaq, but even the Hang Seng is looking pretty weak. So in actual fact, the Aussie market's actually is holding up sort of okay, but nevertheless, this is just looking horrible. In terms of what's doing okay, it's very difficult to find. You can see there's only 23 stocks to the upside. Okay, and that's a massive change from where it was a couple of hours ago, where it was it was pretty close to doing okay. It was pretty close to sort of, I think it was about 65, 70 when I looked at it before. So, but you can see there's a relatively broad-based sell-off. If you can see, so BHP down 1.5%. Oz Minerals, which are flying, we're down. Well, come on, Mike. There's always a Oz Minerals. So Oz Minerals are less than 1% down, so they're outperforming the market. But we've got all of the banks down as well. We've got a few. We actually saw Suncorp earlier in the day, and we also like Linus, but you can see things like Xero, Zip, Afterpay, all getting hit pretty hard. ANZ are still looking miserable as, but we'll have a look at some charts anyway. Now, it's the sort of day where in the first hour, I would be sort of looking, feeling quite comfortable about being long the market. Now I'm starting to get a little cautious about it. And perhaps if you do see opportunities, then it should be look at the market risk overall. So if you take it all into account, which is one of the reasons why we start doing what we're doing, we see the US futures down and dropping. We're seeing the major Aussie index down and dropping. We're not seeing, with the exception of copper, we're not seeing anything looking particularly positive in the metal space or the commodity space as a whole. So it does start to shout a little bit of caution if you're thinking of going long. So you could take that into account in your position sizing. But let's have a look at some charts anyway, because there are some interesting ones around. We'll start with APT. Now, APT have been a market darling now for quite a few months. But really, since that retest of 130, it's just been on a downward trajectory. We broke through that 200 MA last week and are continuing downwards. And I know a couple of you have been short this on the back of that, although it has been a little bouncy. I hope you are still short, because this is looking fairly terrible. But you can see what happened since Asian Open again. You can see we've just drifted down and continue to do so throughout the session. The metal space was looking very positive. We liked BHP, and it really whacked up big time, broke that $50. But as you can see, we've just had a pullback. That could be profit taken from all of this move higher, and we sort of were picking this as a potential long trade on that break of around about 48.50. We did like, though, if we just pop on Oz Minerals, and I came out of this, and then go back in it. You can see a very interesting set of candles here. Oz Minerals were one of the charts we really sort of liked last week. Once it broke this level here at around about 24.75, we said 25 and above would be an interesting place. That was the entry there potentially. Although I know some of there was certainly reason to get in around this level as well. We'll just pop this on. You can sort of see we traded this a couple of times. So this was the latest one. So we took advantage of that move there, which gave us around about that sort of 9.5% mark. Actually got back in when we see it wasn't selling off considerably. We'll look at a 30-minute chart, and you can see really it hasn't gone very far at all. Actually spiked up on the open. It was a bit of a pullback, as you saw in copper yesterday, so we were expecting a slightly more significant pullback, but it's been quite choppy really since yes, Chris, that's a really great case in point. Be interesting as to why the article said the ASX was going to boom today. But you can see how it really is. I'm still bullish about the markets generally, but it wouldn't surprise me now to see with us at the back end of earnings season. Wouldn't be surprising to see a little bit of repositioning. Big tech has had another great run. If we look at where the Nasdaq went up to, it's had another good run, and so it's there's a term kicking around called a stock pickers market, where the market really lacks direction, may pull back a little bit, may get a little choppy. I think that's where we may be at right now. So, but Oz Minerals remain because of what I've done and talked about copper. They remain a sort of chart that or a stock that looks really interesting. FMG, not dissimilar to BHP. We got that breakout, but look, you'd have been caught a little bit yesterday if you got into FMG and come back. It actually delayed its move through that resistance and failed to move higher. Now, another one that has been our chart of the day fairly recently was our Luca, and again, just to be transparent and show you that I do trade history. There we go. So you can see that profit taking going on this morning on this particular trade. So that was entry on a break of here, a little delay because of this sort of small candle action. But you can see that was a nice 10% again, despite today's pull-off. But it is towards the low of the session. Why is it? Why was that interesting? Well, look, this is what we talked about before. It was a 750 break that caught our eye initially. There's that 750 level, and we thought that if we look at we'll actually just take the daily chart back. So we're looking to close this gap. Where does this gap stop? Well, it really stopped there at 895. Okay, we'll take it back again. You can see why it was resistance here, support here, support here. So we actually talked about this when we're talking about this as a potential trade as being the upside, and sure enough, yesterday it got within a few cents of that and then pulled back today. So this is a great example of having a profit target in mind, giving it a chance. We could have taken this off yesterday, done slightly better, but giving it a chance to see what the next move is, but then being brutal about taking it off. So again, in terms of, and of course it positions us nicely because we've banked a few bucks on a 10% or nearly a 10% move, which is great in anybody's language. But now we're in a position where we're cashed up. We're waiting to see if it does tackle that $9 mark, and if it does, of course, we can relook at this. But it is in the resource sector, and most of the resource sectors have just pulled back today. Now, PLS, Ross, both PLS and Galaxy. So you can see we were in this previously. Really nice buy yesterday. Looked as though it was going for the moon. A little bit of a pullback. Galaxy's the same. So it just could be pausing here, but that would be not. So that was the potential break, but there was always the risk. If you can see there, that was the previous high, and then we tried that again about 3 weeks ago. We're back at 135. So it's just pulled back again. So this is a lithium play along with Galaxy, which we've traded this a couple of times. We are actually in a position on this, as you can see, but it doesn't know where to go. So that's around neutral. It looked as though it was going to pop, but then just pulled back all of that in one session, unfortunately. Now, chart of the day for the ASX is Suncorp. Insurers are doing well. This is doing exceptionally well, and you can see why I liked it. So yesterday was a good break, and we've had follow through on that. It's one of the only, sorry, last week was a good break, but you can see we've just had a continuation of that. Now we've broken that, if you like, that candle body at around about 10.90. So $11 or so has been critical on Suncorp. And so, as I said, just watch where that candle finishes towards the back end of the day. If the market keeps on selling off, we could see it drop back down. At this stage, if this is what it was looking like in the last half hour, that candle doesn't smack of certainty to me. But that's certainly a potential interesting trade. And really, there's not a lot stopping it going higher. There's not a lot of pause in this on the daily chart. So just pop it on a weekly chart for a second. So we could see it up to around about this 1260. So that's a really nice move up from where we are now, somewhere in the region of, yeah, I thought it was about 10%, yeah, 11% actually. So that's one to keep an eye on going forward. Now, the other one that is we talked about last week again, and it was a flip up between this and Suncorp as the chart of the day, okay? So LYC, obviously we've had a major pullback there, down around 20, just under 20%. Messed around here for a little while, put it on line chart. We saw that double bottom. So this was one we're tracking if on a break of 560. Okay, so it's done that on that candle there that we saw last week, and then it's inched its way higher. Was doing very well at the start of the day, but has dropped off a little over 1.5% since open. So this is the reason why it's less. Well, I'm liking this less than Suncorp, but no reason to get out if you're in. And certainly the upside on this is around about 7% up to that 645 level. So that came a close second in terms of our ASX share chart of the day. Now we'll just flip to the US. Obviously, the US is in a bit of a state, but we'll just have a look at a couple. First of all, again, FCX. Bit of profit taking went on this. This was a really nice break. So we talked about this last week being a chart of the day. On that break, moved up very, very nicely. Again, Freeport is a pure copper play, so we're up 8% on that close. Then we actually spiked up to 11% and then sold off. So quite a big sell-off. Quite a bit of profit taking going on yesterday in the US. It actually closed near its low, so it'll be interesting to see where that lands. But with copper being higher on the futures contract, we may well see this continue to pop up. So we're looking for a close price or even an intraday price if you're going to get aggressive over 44, over 44.30. That might be interesting to see. Now the other one that we like from the US point of view, if we're going to continue our long theme, would be BBY. Let's just pop this on a daily chart. We'll just put it on a template. So there's BBY. Now, why BBY? Well, look, there's the break. Okay, at 122.16. Just about scraped the top third, but if we get any further move higher with this in Best Buy, then that could be one to watch. But of course, we're not in a great place. Now, if you want to go short, as well as the possibly APT, which I've already talked about in Australia, and it will be a short-term short, if you know what I mean. The banks are looking dreadful. ANZ broke this line here at $28 and has really continued its merry way down, despite the fact we've had a couple of candles which have been green. We only got one slight up day, and then we've got a gap down again. This looks as though it could be pretty tricky. Macquarie have been one of the ones we've really liked, but you can see Macquarie's pulled back. So we've traded in this a few times just to take advantage of the slight profit there, slight profit there, slight profit there, and just took a slight loss there and just let it go once it's, and this was actually taken out on the, just pop a MACD on this. I think we took it out on the basis of that. So yeah, we took this out on the basis of this MACD signal line dropping or moving above the histogram line. and hence it's continued downwards. Now we could have stayed in if we're using the 20 EMA, but even those EMAs are starting to flatten off as well. So all the banks looking sort of weak. One wonders whether the airlines are going to struggle. So if we look at LUV, which is a play that we've made a couple of times here, that doesn't yet look as though it's potentially due to drop. If we look at US banks, they held up surprisingly well last night. JP Morgan looking strong, and that's not a bad chart actually. If you believe that there may be some bond yields about to rise, if we get some inflationary pressure, or we get a sell-off in the Nasdaq and a rotation, banks, but the likes of banks and the BBYs of this world, and Home Depot and all that sort of stuff are likely to benefit again. Just bear in mind that we are still in earnings season now with BBY, just to fill you in. 27th of May, I think, is the earnings date. So you'd be talking a 2-week trade possibly on BBY if you're interested in that. So money's coming out of growth and into value. So we're going to see that across the board, with the exception of materials. Even Caterpillar, which again have been our favorites for a while, look as though they may pause a little bit, but that infrastructure spending again may help support Caterpillar up there. It looked as though we had a break on this. You can see there, that was the resistance we broke last week. Nice move up, even closed higher yesterday. But just that candle suggests that we could be just, if we do get a sell-off, we could be back down to 234 pretty quickly, but one to potentially keep an eye on. On the short side, you just have to look at tech. Look at Zoom. Zoom is getting hurt significantly. Of course, now we're getting reopening. And we could even see it test 234 ultimately, which is a big drop from where it is now. But if it just moves any lower than this, you can see there was quite a lot of action back there in September last year. So if we're going to move below that, we could see ourselves down at 250 or even 230 to try and to check that out. Okay, 3 lines. See you guys. So the three MAs I usually put on are the 10 and the 20, which are the blue line is the 10 EMA, the yellow line is the 20 EMA, the red line is the 200 EMA. And you can see how this was, this is a great example of why the market looks at 200 MAs on daily charts really only, but you can see how this was it's a great example of the market just picking that 200 MA and saying, right, we've broken through it now it's going to be resistance. You can see how the number of times it smashed against that before giving that up completely and starting to move down again in between sort of March and mid-April. So those are what I prefer, and because of that, I'd alter my MACD to match that. But you can see there we've got, if you look at the MACD on Zoom, you can see we've got this increasing momentum to the downside. Okay, is there any other charts you want me to have a look at, guys? I don't mind what it is, FX, or cryptos. We haven't looked at cryptos yet. If you want me to have a look at crypto, we'll have a look at Ethereum because that's an interesting one. Here's a 5-minute chart. We're seeing really, we got a little bit of a sell-off yesterday. I'll just put it on a daily chart to give you context. So we actually broke the key 4,000 barrier on Ethereum. And then the market just got a little twitchy. We got this doji type, really long candle once it did that. So it closed below 4,000 again, and then we got some follow through in Asian trading today, some sell-off, perhaps some profit taken from this. So it'll be interesting to see how far this goes. You can see it's trading towards the low of the session on that 5-minute. You can just see it's drifted downwards, albeit bouncily. So really could be worth watching this 3736 level. If we look at Bitcoin, which has been a completely different animal of late, there's Bitcoin, and what was surprising here is once it broke, you can see here with all of these retracements, we've then subsequently hit our next high, and whenever we've retraced, it's been higher than the previous one. This was different. I did actually think that we might sell off at that, but look at this candle. So there's a rejection candle, and the next day it bounded up. So in terms of close prices, it was only just a little below that last retracement. So it's actually recovered to stay quite, and now to stay sort of range bound. So you can see it's now trading within quite a tight range. It's a very different chart to Ethereum. There is always the assumption that cryptos will move together, but at this stage, Ethereum looks like the place to be. Why is China going against the trend? I didn't think it was. No, we've got China holding up okay. Maybe that soft inflation data, what that does is so I don't know whether you hear early on when we look at economic data, Rod, but the inflation data, both month on month and year on year, we're about 0.1% lower than expected. We are in deflationary place on the month on month. So what that does is it gives the PBOC some real chance to move if they want to stick in some more quantitative easing of any description or stimulus. That inflation data does give them the power to move, and that may be one of the reasons why China is actually holding up better than some of the other Asian indices. We can look at the China 50 and see what that looks like, because I must admit I haven't looked at that since last week. There's the China 50. So remember, this is a futures contract. So again, a great example. There's the 200 MA on the daily chart. So it's looking to hold on to that. So you can see the futures contract is actually higher going on now. Remember, again, with futures contracts, if I just put it on there, so this would be China. This would be, let's just put it on there because it makes it easier for me to work out. So this would be about China close yesterday. Okay, so that, remember, this being a futures contract, we actually got a sell-off along with the US market towards the back end of the session. So although we're showing a better day in Asia on the futures contract, if we go back to the daily chart, bear in mind this reflects, this is reflective of the open in the Asian futures market. Okay, so we're still down. If we look at the Shanghai index, we're still down on where we closed yesterday, even though the futures contract is actually looking quite positive. And as I said, I'm pretty sure that's on the back of that inflation data. It'll be interesting to see how much more upside is in that, but you can see the action in Asia. There's that inflation data coming out, and how well it was. I'm guessing that's when it came out, and how well it responded to that. It's just whether it's got any more upside at all on this. But great question, Rod. It may also be helping copper up, of course. So just recheck in on. So I'm just going to see where this is. I'm going to put it on a really short-term chart. Yeah, so you can see there, really, since Asian Open, we've moved higher, and that's really. I'm wondering if that is the Chinese inflation data that's pulled that back up. But you can see we are almost at the highs of the Asian session again. Yeah, so we're up over 0.5% now. That was about 0.45% when we actually kicked off. Still looking very gloomy in terms of the futures contracts going on. Okay, well, look, I think I've answered all your questions. So just to reiterate our charts for the day today, that China 50 could be worth looking at, but I probably wouldn't be interested unless it sort of breaks yesterday's high. Looks as though there's some short-term stuff. So if it can break this level here, so even today's high, we could see it sort of up in the first instance around that sort of 1700 is a key level on this. Maybe that's what to keep an eye on. So anyway, our charts of the day today were light in terms of the ASX, Suncorp, but obviously for a medium-term play, we've talked copper. Oz Minerals looks worth a look in the US. Keep an eye on FCX or under LYC in on the ASX. Oh, I meant to talk about coals. Coals were our chart of the day last week. Really, this or one of the charts of the day last week. This really hasn't gone anywhere. It's pretty neutral. I think we talked about it earlier in the day, but you can see the upside is limited to this 200 MA. I'm pretty sure that was one of the ones we looked at. T-Mobile, another one to keep an eye on. Just watch that in the US over $33, I would say. But really, BBY was good. And then on Worley Parsons, yes, it's there. I know we talked about this on a break of this level here. So that was the level we were interested in last week. We actually popped this up as well. So we've had that move up, but just a pullback today because of the resource weakness. And then, of course, we had a GB pound. Have I got rid of it? I think I have. We liked GB pound yen on a break of 150. Let's call it 154. But we're also keeping an eye on GB pound Aussie. Which it's flatlining today, so we're looking for a move below where it's at now to potentially trade this bounce to the downside, possibly look around that 180 level. So if it breaks 180 to the downside on a candle on the hourly chart, we could see it starting to sell off, but of course to the upside there's that 180.50. So around about a $50 range that we're looking at. And a move either way could be significant. It's going to suggest that something interesting is going on in the market. So if we do get a sell-off, further sell-off in US equities and the NASDAQ, and maybe even if copper starts to pull back a little bit again, we're likely to see Aussie dollar weakness, and potentially that could be your picture complete. Okay, guys. Well, look, I hope that's useful. You're welcome, Chris. See you later. We have talked a little bit longer. You're very welcome, Andrew. Hope that gives you some things to have a wee look at. Yes, we'll see you later, David. Just tomorrow, don't forget, we've got Inner Circle going on. I'll just give you a couple of links. So here's Inner Circle. We're talking trading a trend continuation. So if you're not in for that session, get in for that session. And we've also got, just pop that in chat. I think most of you are on there anyway. But that's at 8 p.m. Eastern time tomorrow. So we'll go through what a trading plan would look like if you're going to trade after a pullback. And then also, we've got a session coming up on Thursday. It's a two-part session. For those of you who want to look at your trading plans, it's an intermediate traders clinic, which is called Creating Actionable Trading Plans. So go and have a look at this and see if it works for you, because I think this will be useful to many of you who are, even if you've got a trading plan that you're happy with, there's going to be some tips on there to take it to the next level. So I'll just put that into chat as well. Just do a quick refresh on the ASX, see if it's still looking, see how it. There we go. So we're down 1%. So we've David, it's great to see you here. I know it's 4 a.m., mate, but good on you for getting here. And look, as you've seen, some of the ideas are not for some of the charts of today, are not for right now. They're perhaps for a little later in the day. So if you are, if I do see maybe recordings, we can make it recordings available to you guys. So, but yeah, you can see we're just having a little bounce now, which is relatively positive. Let's just quickly have a look at a couple that we've been having a look at, just see if there's some buying coming in. Let's just get rid of that. We don't need the trade history on that. That's interesting. Oz Minerals are now higher. So bucking the trend, you can see that I think we're actually higher than yesterday's close now. There's yesterday's close. Yes, we are by a few cents. What's 27 on Oz Minerals? If that breaks out, we could see that precipitate some more buying. And likewise with FCX tonight, which I've already referenced. Okay. Well, take care of yourselves. We'll catch you very soon. I hope you've enjoyed the extended session, and we'll catch you again. Been trading GB pound, Japanese yen. David, great work, mate. Good day to trade that. Well done, buddy. Well done. Okay, catch you later. Bye-bye for now.